The Qs are up over 42% this year, but can the run continue? Let's take a look at the charts to find out. All right, so first the good. We have a nice bullish and orderly uptrend in place. We also have been consistently taking out all the swing highs from 2022, and we recently passed the 372 and 382 swing highs, and it feels like the next stop is going to be the all-time high around 408. Now all the major moving averages are pointing up, and we're also beginning to work off that overbought reading on the RSI. So just jumping into the weekly chart, I think it looks really good as well. I'm not that crazy about seeing this inverted hammer candle. That's probably the closest thing we've seen to any kind of reversal candle on the weekly. I have seen worse, but it is there. So maybe you want to do a little bit of trimming, and if you're nimble enough, you could do a tactical short. All right, so now the bad. We are very extended over the 200-day moving average, about 20%, and we have gone uncorrected pretty much all year. The only correction that we saw was in February to March, and that was about 8%, and that technically wasn't even a real correction because it wasn't greater than 10%. Now, when markets get this steep and uncorrected, there is usually a reversion back to the mean, and this is what you want to see. This is healthy for the bull market to continue. Now, I see three major gaps in the chart at 369, 332, and 308. Now, based off of the 52-week high at 387, we are 8% above the 50-day moving average, 15% above the 100-day moving average, where that gap at 332 is, and 20% above the 200-day moving average, which is where that gap at 308 is. And just remember, gaps do tend to get filled over time. All right, so just some final thoughts. We are entering earnings season, and since stocks have had such a good run, earnings just can't be good, they have to be great. And as we saw from the price action with Tesla and Netflix, both of which were fine reports, the market is more likely to sell off when stocks trade up into their reports. Now, other mega cap stocks have been pulling back ahead of their earnings, and I always prefer to see this. Now, I think we can pull back to the 50-day moving average, and that would be roughly an 8% pullback that would coincide with the lower trend line between 350 and 355. This is an area I'll be watching closely for support. Now, let's also not forget the QQQ volatility index. Vol-Q is at the lower end of its range, and this is typically not when you want to buy stocks. Now, it never hurts to hedge your portfolio with the VIX being so low, but everything I'm seeing is normal bull market behavior. Let's see how the rest of the mega caps report. Overall, I'm expecting good things and for the bullish trend to continue.